excited to be here, and I think I was here also in the startup Istanbul, and I did sat through all the pages yesterday, and also I was in startup Istanbul, and it was really impressive. And I feel that almost every company here has a shot at it, because it is not really the idea which counts; it is the execution. And if you can execute, and if you believe in your own ecosystem, and if you believe in your own product, I think anybody can be successful. But it is really exciting to be here. So one of the reasons I'm here is that I live in Silicon Valley, but I have a much larger global viewpoint about the investment, about where the business is, where the future is going, with reference to the angel investment. So if you think the total venture money, the VC and angel investment total worldwide, that's about $50 to $60 billion, depending upon the year. And that's a drop of an ocean of world economy. The total world economy is upward of $70 trillion. So $50, $60 billion is absolutely nothing. So really, with the crowdfunding, with where we are going, and the way the explosion of innovation is happening everywhere, we are going to see a much more exciting future ahead. So what we heard yesterday, that it takes 9 years to exit, and there are a lot of norms of angel investment. Well, I think it's going to change, and we are the new breed of investors who are looking at world as our backyard, and we want to see that a lot more people get involved in the angel investment. And why I think that way is, my background is I'm a serial entrepreneur. I did my first venture when I was in college, and within a year I had an exit 12 times. And then I also went and did the manufacturing. I had an IPO. I moved to London. I started in India. I moved to London, and then for the last 20 years I'm in the US. And I have done almost every possible vertical. So we did in advanced composites, I was in thermal insulation, I was in thermoforming, construction equipment, and everything I was doing at a global level. So for the last 25 years, I've been doing 6 to 8 round-the-world trips in a year. So I really played a global game for almost the last 25 years, and I came from the brick and mortar. And then I got tired of the brick and mortar. I sold all my companies from 2000 to 2005, and then I formed this new group of companies, which I'll talk about. And so it is easy for me to connect in the dots. I have about 25 operating companies in 8 countries. And that's why I can actually connect the dot, because I have a real-time information about how the world is changing, how the cost of operation is changing, what kind of taxation issues are changing, how much you have to spend money in terms of forming the company, closing the company, changing the game. So that's why I can connect the dots. And so the scale group of companies, I'll be very brief, it's a group of companies which actually applies global context. We have various companies, various divisions within the company, about 20 of them. We raise capital, we have an angel investment group, we have talent company, we have a sales company, we have about 800 employees in our talent company, 300 employees internally. And that leads me to the relevant discussion today about cross-border angels. So in 2010, I visited 10 countries, met 300 startups. I came here in Istanbul also. And I was part of one of the Microsoft thing on the panel. And I realized that innovation was happening everywhere. I think Vitaly talked about it, everybody else talked about it today. But the main thing was there was no ecosystem for these companies to be successful. And so the angel investment, as you know, it's a 20-mile radius. People just invest locally. That is the norm. So I wanted to change that game. So now we have a group of investors who are super angels, who are global. We are about 150 members in our group. They're spread in China, India, Europe, US, UK, and we look at international deal flow. So for example, 2 weeks back, we look at about 100 deals a month. 2 weeks back, we had a selection committee. There were 16 companies from 8 countries. So I'm very happy that this is happening. 50% of our members are family offices and funds. And then we also do tech scouting for the corporate divisions. So how do I invest? This is the simple equation I have. So if you take team, multiplied by product, multiplied by market, multiplied by timing, equal to dollars, or whatever the currency is. So of course, number one is return on investment, right? But at the same time, all the four factors has to be in sync. So if you apply, like, say 0 to 10, the maximum points I can get is 10,000, right? But what is interesting is if one of them is 0, you get a 0 output. So it could be a great team, great product, but if it's bad timing, 0, you are going to get a 0 answer. So I value the companies looking at all the factors. Now there are all other factors, and I think, Ari also, is one of the international investor, and he's going to talk a little bit about how he invests in angel investment. But when you start talking about international investment, these are the factors, I apply. And I'm talking about really the way I look at it. It doesn't mean that, because every angel investor has a different objective of investment. Some do for money, some for fun, some do for mentoring, some for advice, and combination of all. So let's talk about the team. So number one is, that you really need domain expertise. And when I mean domain expertise, you may have an idea, and if you don't have other domain expertise, then you hire them and put together a great team of domain experts. So we would like to see that, you have the domain expertise, not only in the product, but in marketing, in sales, in terms of all the way to the exit. The second most important thing is the global mindset. When I say global mindset, and Jonathan talked about the global footprint, is that it doesn't have to be Silicon Valley, or it doesn't have to be London, or it doesn't have to be a particular location. We need to look at and start dissecting each business function and say, where can I do more effectively and more cost effective? So when I say that global mindset, so you want to not only want to create a capital efficiency, but you want to create market efficiency. You want to also create human capital efficiency, and that's what you can only get if you think globally. And the other thing I'm looking at is a non-linear thinking. And you will see that many investors, even in the Silicon Valley, will say that, hey, focus here first, then go somewhere else. Well, I don't believe that. Of course I want to focus, and the steps has to be in line, and certain things has to be completed. But at the same time, you really have to start preparing for your next game, the next level game. And that next level game, so that's you require a multitasker, a multidisciplinary thinking, and non-linear thinking. And that's what I would prefer in a team. The flexibility, whenever flexibility is, we are living in a totally dynamic world. Things keep on changing beyond our imagination. So the team has to be flexible. So many engineers are not flexible. They want to do certain things. Commercially, it may not be viable. You need flexibility in terms of valuation of the company. So I need to see flexibility at various levels. Innovation, 24/7, 365. Why? Because idea is not important anymore. Of course, idea is good, but execution, you require innovation all the time. That means as you execute and as you start facing, maybe the customer feedback is different, maybe the investors are asking for something different, you have to keep on adjusting and refining and retuning your business model. So you require the brainstorming, the whiteboarding, the innovation all the time. And that's why we would like to look at if there is a multidisciplinary thinking, if there is a non-linear thinking, if there is a global mindset, then by default you will be doing innovation 24/7, 365. And the last one is likable. I have to deal with these guys. I have to like the person. So it is a lot of human contact. And here, so many entrepreneurs. I mean, by default, if you're an entrepreneur, I'm still an entrepreneur. We are a very individualistic person. We are very, confident about what we do. But there is a very thin line between confidence and arrogance. And we find so many entrepreneurs, If it's an arrogant, he's not going to change. And it will be very difficult to deal with that team if there is a CEO or there is a founder who's on that borderline. So after the team, we look at the product. We look at the product, and I'm not looking for, again, we talked about unicorns and things like that, but you just have to improve an existing solution. To be successful, you don't have to be 100% better. Even if you are 10% better, that's enough to be successful. So we would like to see the solution which is at a global level, but it improves an existing solution. So you're not trying to create a category. And there's nothing wrong in trying to create a category. But a category requires millions and millions of dollars, and you are in for a long haul. And that will be exception for us. The other one is differentiator. Now when I'm talking about differentiator, it's not only differentiator in some design or product, but it is how you deliver, how the product is designed in terms of adoption in the marketplace, and that is a differentiator we would like to look at. The high tech, but easy to explain. I was last year in Skolkovo in Russia, and when they were doing so many presentations, so many pitch, it was almost like I was getting a professor giving a pitch on some technology solution, So you couldn't be proud about your, solution, but the end result, the customer has to adopt, and it should be easy to explain, easy to understand. When we go and use, in high-end technology today, even the TV, we just click, and so from a user point of view, it is very easy. But it is much more complicated to make it, to design it. So we like high tech, but it should be easy to use, easy to understand. Scalability, obviously, so when you have a scalable market, your product design, the product delivery, the product, the logistics, all this has to be scalable also. So if the team has a global mindset, as I was talking earlier, you will have that design. And the combination of all these things, makes a cool product, So I'm not saying cool for the coolness sake, that all this has to be in sync to make a cool product or a cool investment for us. So in terms of the market, again, easy to test in a beta market. If you're in Turkey, if you look at the Turkish market, is a great market for beta. And I'm using, Turkish market is great as beta because you have to be global. Because the total GDP of Turkey is about $800 billion. Istanbul alone is about $320 billion. That's a great market as a beta. It's like a small country. And so once you do the beta, then it has to be applicable at a global market. So we would like to look at companies who can do a great beta, which is faster, do the test fast, the sales cycle should be shorter, and then go for the global market. And the other thing is emerging market. I think Jonathan talked about the emerging market. You have to have an emerging market play. You look at the mobile business. The mobile, China is number 1. India is going to be number 2 by next year. In the US, which is 2 now, but India is going to be number 2 by next year. I will give you another example. How many people know here who in the world consumes the most whiskey? Anybody? Who do you think consumes the most whiskey? No, it is Indians. Indians consume 350 million cases. You know what is the total world's consumption? Same, 350 million. So India consumes 350 million cases of whiskey compared to the whole world. Do you know how many raki is made here in Turkey? Raki about, the total consumption of raki is about 50 million liters, which you translate to whiskey cases is about 7 million cases. If you can move 2% of Indian whiskey drinkers to raki drinkers, that's another 7 million. That's you doubling the production. But you have to know that you have to go after this, and also this 350 million cases is on increase, so you don't even have to go and replace, it's just pick up the new market. create a tequila style, branding. So when you start exploring the global market, emerging market should be absolutely critical to look at it. Why? Because the cost of entry into this market is low. So you want to really look at this market where the cost of entry is low, sales cycle is low, and then based on that, piggyback on that success for the global market. The other thing we like is the licensing play, where the licensing could be technology licensing, or could be trademark licensing. It could be best practice licensing. So IP is preferable. Obviously, the patents are there, but patent has a life. The patent expires in 17 years. The brands don't. So I like the brands, the market penetration, because brand will get better and better, while the patents can be, it's very expensive to protect your patent. And there are countries where it will be very expensive to protect your patent. So it's good, it's a deterrent. But I prefer more the brands and the market penetration. And the timing. I mean, timing is everything. I did one project in 2002. And it was waitersforyou.com. It was a food delivery business. I also designed a WAP, with a wireless access protocol for the mobile phone, and it just didn't work. It was a totally bad timing. I was 10 years off. So really, the timing is critical in these cases. The economic realities, because that can change. If you're trying to raise money in 2008 in the US, you are in the wrong timing. So we want to look at that, timing of economic reality in terms of, when to launch in the marketplace. That's also important. But at the same time, that's why we like that if you have a global play, and if you do think globally, then even if economic reality can change in one geography, you can start thinking about other geography because it's already in your plan. And I already talked about the cost of market entry, that you want to find beta, and at the same time the major market where the cost of entry is low, and then the upside is huge. Today, if you want to go into the Brazilian market or the Chinese market, the cost of the market, marketing has already gone up. And that changed in last 3 to 4 years. We have a company in China, and I could see way before it was happening that China was moving from production country to consumption country. That means in the knowledge economy, if you want to get anything made in China, it has become much more expensive than earlier. So it is impossible to export from China in the knowledge economy. While the economy shifted so much and government focused on local consumption, so now China has become a market. So we moved and we changed our focus on our company in China. And sustainability in case things change. But if you think about all the factors which I talked about, and you combine all those factors, by default you will be leaner, you'll be more flexible, you'll be more global, you'll be designing your company to go and hit anywhere in the world, and you'll be more sustainable. And particularly for a Turkish company, you have a bigger market, you can always retract and start operating in your market till the time the things improve. But you have to framework, you have to design your company with that framework. So these are some of the things which we look at, the cross-border angel itself. Because we invest internationally, we look for local traction, we look at for local investors, we prefer global play. We also co-invest in lower amounts. For example, last month we invested in a company in New York. The company was formed in South Africa, moved to New York, and they do crowdsourcing of brands and designs. The other company which we're investing is in consumer robotics. That company is out of India, but we asked them to form a company in Singapore because we like to invest in a jurisdiction which we prefer. And eventually, that company is going to move to Canada. The third company which we're investing is an Australian company, has moved to Singapore. They're in education technology. These are some of the smaller investment we are making through the SPV. In the summing up, this is what it is. Get outside your comfort zone and treat, the world as your backyard. because nothing is local anymore. You know, you are a part of the global game. I always say that, you know, if you look at, you know, today doing business is like playing a game of chess. When you look at that board, you have to play the board. You can't say, I'm going to play the board into my corner. Because if you don't go, somebody else will have your lunch. Somebody else will come. You know, 5 years back, if somebody would have said that an American company would be doing taxi business locally, you would have said, how? You know, that's a very local business, local drivers. And today, you know, a San Francisco-based company with a $40 billion valuation is operating in 250 companies. So even a haircutting salon will have, you know, some chain can come from outside and then wipe you out. So there is it's not a question of growth. Going global is a question of survival. It's a smart strategy. And these are the things, you know, which we like. So, you know, as I said, when we look at it as an angel investor, when we look at it, it's a much different viewpoint than most of the local angel investors will look at it. Thank you very much.